This is a lecture from Open Tuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
Those previous two examples went through there and looked at calculations that involved services and share-based payments, being equity settled share-based payments. The following small example just goes through there and looks at transactions involving goods. Okay, so you are purchasing goods, and in purchasing those goods you are issuing share options. Okay, the key bit there is that when you're looking at the fair value, we take the fair value of the goods. We worked out the fair value of the services by looking at the fair value of the share option, which was given to us within those questions. Here the key bit is that you take the fair value of the goods. Okay, so it says explain how the transaction should be dealt with in the financial statement for December 2015. So here Caerphilly purchased inventory at a cost of $10 million and we sold them in November. So there's a profit on the sale of $4 million. It says Caerphilly had cash flow problems during 2015 and negotiated with its suppliers to exchange the goods for options on its shares. So what you have here is, instead of just a standard credit purchase, you have the purchase of goods in exchange for options on your shares. So when you're looking at the journal entry, you are debiting your purchases, crediting not payables but equity, and your equity under that shares to be issued category is part of your other components of equity. Key bit once again is that we need to look at the fair value of the goods. They are there at $10 million. Do not be put off. There's a red herring. There's something to divert your attention. Yes, the shares had a market value of 11.5 million. We're not worried what the shares were worth. We are exchanging 11.5 million worth of options for goods costing $10 million. So we're incentivizing our supplier to take the shares, knowing that they're selling us $10 million worth of goods, but they're getting something in return that's worth that little bit more. Okay, so we are going to record the purchase. We're going to record the purchase based upon the exchange of the goods given up, and the fair value of the goods given up was the $10 million. If that's the case, we are going to debit purchases with $10 million and credit your equity as shares to be issued at that $10 million. That's it. The key bit is, remember, it's the fair value of the goods or the fair value of the services. It's nothing else to do with anything that could be thrown at you within the questions. Other than that, that's it in terms of looking at your equity settled share-based payments. Have a work through those questions again, make sure you're happy with them, and then we'll pick it up again in the next session by starting to go through there and look at your cash settled share-based payments.